Hello everyone, welcome back. Welcome back to the chat room. This is Ed Ponzi. Great to be here with you this evening. It's Thursday evening, October 9th, and we've got a bunch of questions, so we're going to get to those questions first, and then we're going to take a look at the stock market, which has just gone completely bonkers, and we'll also take a look at some currency trades that are ongoing. So there's plenty to discuss. So let's kick it off with your questions. And the reason why I have Aussie New Zealand up here to start is because of one of your questions. And it's like, the question is, how good is the quality of support of Aussie New Zealand at 111.18? And that area, right, you can see that we drew in support and resistance areas already. But there's another, like sort of a minor area forming here. And that's, the root of the question here is like, how good is this area? It's a great question because it's important to try to figure out which, not all areas are equal. Okay, some are better than others. So it's right there. Okay, so how good is this area? There are a few things I look for. The first one is like the length of time that they've been in effect. This one has been going on for August, September, and October. This level, which is around 109.15, has been respected for about 3 months, whereas this level has been, you really have 2, maybe 3 days of activity, and it's been respected for less than 1 month, right? Starting here, first day of the month, until now. So really it's only been 9 days that this has been in effect. And you look at the number of times it's been successfully tested. I count this as 1, 2, and 3. I would count this as 1, 2, and 3 also, but it's 3 consecutive days. So when it's more spread out like this, I like it a lot better. If you're telling me that the support level is just for 3 consecutive days, then that could be fairly insignificant level. Okay, so I'm not saying it won't work. It could work. There's no way for me to know. All right, clearly there were buyers here in early October, right? Is there any way for me to know if there are still buyers down there? I really don't know. But this doesn't prove as much, right, 3 consecutive days, as this does, which is a series of tests spread out over time. So I would call this now, it's not completely insignificant. I'd call it minor support. Maybe to symbolize that, maybe we put a broken line there or a different type of line and call that minor support. And I would consider these other areas to be major support. Well, major support down here and resistance up here. Terrific question. And the reason why the question was asked, I'm looking for an elevator trade, but I'm looking for the bigger targets. And the difference is it's a 170 channel pip, 170 pip channel here. It's a 360 pip channel here. Well, that's a good point. And I think with something like this, we could probably maybe even move it down to an hourly chart. And there you can see that support level a little bit more clearly. So I would say it's minor support. And so if you want to trade off of that level, I wouldn't expect a lot, but you might expect a little bit of support there. It might work. But the big level is obviously lower. Okay. All right. And hopefully that gives you some insight into not just into this particular setup, but also gives you an idea about how I look at these in general. And obviously at least 170 pips, is not an insignificant. The thing that worries me is when people try to trade 30 pip, they try to trade little 30 pip ranges, but to me that 30 pips is not a range, it's a consolidation. The price is likely to break out of that. Okay, So anyway, good eye there picking out the levels. And great job, great questions. Let's move on. Additional questions. Hello, Ed and Rick. I have had my eyes on Euro-Yen. A break from 135.75 support is crucial, don't you think? Let's pull up the chart. Euro-Yen, we're going to go, see, we can stay on this time frame for a moment. Maybe push it to a 240, make it a 4-hour chart. And you can see there's a fairly significant, I'm going to push it all the way out to a daily. There's a fairly significant level here going back. Now, the level in question was 135.75. So pushing all the way down to about here. And is that a key level? That's absolutely a key level. You know, this is another type of support and resistance scenario. Like, you know, theoretically it could bounce off of there and become an elevator trade, like a 500 pip range. But the thing about the yen is the euro has been strong for a couple of days here, and the dollar's been weak for a couple of days. But the yen is starting to gather strength, and the stock market is starting to crack. And it's all happening at once, and that's the kind of thing that really gets my attention, is when all these things are happening simultaneously. Okay. So take a look at dollar-yen really quick. And you can see, is it breaking down? It could be. It could be. Looks like it could be a double top. It's starting to leak, right? It's starting to leak air a little bit, and that coincides with the sell-off that we're seeing in stocks, and we'll talk about that in a few minutes. Another question: how do you trade the false breakout? Let's go to Aussie New Zealand and take a look. And this is one of the charts that we looked at earlier. But what if there were a false breakout? And we used this as an example before. Suppose that there had been a false breakout. In other words, this is resistance. The price goes up, it breaks resistance. You allow the price to break resistance and then set an order to sell short underneath, right? So we would have to, first the price would have to come up above this black line. That would have to happen first. And then that red X becomes a sell. Now, how do I determine where to put that red X? Well, let's just say, for example, this is on the top. This is about 113 on the bottom. It's close to 109. It's about a 400 pip range. You take this out, right? So if it breaks out here, I'd probably take 10% of that range and place the entry 40 pips under resistance. But I only do that after the price has broken out above resistance. I place my entry 10% of that, you know, potential gain on the trade, which is 40. Right, because it's 400 from here down to support. 10% of that's 40. I'll put my entry 40 pips below that resistance line. So if it does break, if it breaks out and it just goes higher, we don't really care, do we? Because it goes higher without us, but we're not long, we're not short, we don't care. We wish everybody well who is long the trade. But if it breaks out and then it fails, now we've got them where we want them. So if it fails at that X, that means the breakout traders are all losing money, and that means they are likely to abandon the trade. And that sets us up for success, right? That if the false breakout creates, in my mind, a higher probability of success, because we all know the psychological position of being in a losing trade. A lot of times when I'm looking at a chart, I'm really just picking out where are the bulls going to feel pain, where are the bears going to feel pain, and I'm kind of setting up my trades that way. And in my mind, this is where the bulls would feel pain if the price successfully broke out and then failed. That to me would be the pain point. Okay, great question. Here's another question. John Key, the Prime Minister of New Zealand, believes that 65 cents against the dollar is fair value. And he did say that. Where is 65? Somewhere way down the bottom. It's not even on my chart. Let's go weekly. He thinks it should be down here. That's the Prime Minister of New Zealand, who also happens to be what? A former currency trader. He was a big currency strategist at Merrill Lynch, and now he's the Prime Minister of New Zealand. Now, he called out 65 as fair value. That's just an opinion, and it's just jawboning. He's trying to talk this currency down. I think it's wonderful, though, how the price bounced off of this support level. Not that I did anything with it, but I think it's wonderful how the price bounced off of that support level, don't you? It's amazing how these levels work, you know. But 65 is his fair value. Does this mean the Reserve Bank of New Zealand will not raise their rates anytime soon? Yeah, I mean, he's trying to talk the currency down, and he certainly does not want to raise rates, and frankly, there's no reason to raise rates. And the big problem with New Zealand, and it's also a problem with Australia, and to a lesser extent, a problem for Canada, is that commodity currencies, right? Countries that do a lot of business based on commodities, and New Zealand is one of them. Commodity prices are just falling and falling and falling, and you know, it makes it very difficult for the New Zealand dollar to rise. So I would think that you know, there's not going to be any rate increases from New Zealand. I mean, you know, also, I mean, there's so much bad news right now. I mean, it really looks to me like Europe is going into a recession, and you know, that's 30% of the world's GDP. It's kind of hard to see how that doesn't drag other countries down with it, and that would be my main concern. So I don't think anybody's going to be raising rates for a while. What do you think of that? All this talk about raising rates, you haven't heard any of that talk recently, and that's because things are starting to look ugly out there. I mean, look at the price of oil. Breaking down, that's on the weekly. Oil's had a rough week, from 90 bucks down to below 85 for, I believe, the first time this year. Right? That's pretty brutal. And I think of oil as an economic indicator. Well, it's not the first time this year it's been below 85, but it's been since early January. It's been this low. Probably see the head and shoulders up there. Anyway, this is an economic indicator in some ways. The price of oil is crashing. There's a lot of reasons why. Increased production in the U.S., and it looks and that causes the price to rise. In other words, right now there's a lot of and let's cut off the supply and let supply and demand even out, and the price will stabilize. That's normally what OPEC does. But it's all falling apart. OPEC just isn't production. And now, instead of cutting their supply, Saudi Arabia is talking about increasing their supply basically to steal market share from other members of OPEC, which is just going to lead to a free-for-all, and this is one of the reasons why the price of oil is falling the way it is. Okay, so under these circumstances, though, you could also say oil is an economic indicator. The demand for oil is falling. This always happens in a recession. It could be a sign that we're going into a recession. Certainly, I think Europe is. And, you know, it's hard to see how Europe doesn't drag other countries down with it. So nobody's going to be raising rates anytime soon. Don't be surprised if New Zealand has to cut rates at some point. They still have the highest rate out of all the the currencies that we trade on a normal basis. By the way, speaking of trading currencies, have you guys seen, I don't know how many of you guys, Arrow, they changed their commission structure. So something like euro might be 0.2 of a pip plus $6 for a commission, round-trip commission on, say, one lot of euro USD. So if I'm paying, like, I'm just pulling these numbers out of the air. This is what I think they are. They're approximate. But if you think about it, right, one pip of euro USD is $10 on a standard lot. So if they're charging $6 commission on a standard lot, that's 0.6 of a pip. And then the spread is maybe 0.2 of a pip. You add it together, the whole thing, it's like 0.8 of a pip all put together. That's outrageously tight spreads. And I was talking to somebody from FXCM just 2 days ago. A couple of people from FXCM I had a discussion with, and they seem to think that the tighter spreads are going to win them market share. They're going to win people over. So I know that a lot of you guys use it, but if you haven't, take a look at the spreads on FXCM right now. It's really they've really tightened it up, and I'm wondering now which other brokers are going to do the same thing. Here's another question: how does the economic outlook report from the IMF affect the trader's sentiment? Now, if you missed it, and we didn't really discuss this, but the IMF lowered their forecast for the global economy. Again, I believe it's the third time this year they've lowered their forecast for the global economy. And I think it probably has added to the negativity that we've seen, particularly this week in the stock market. It adds to the perception that Europe could be going into a recession. And so I think it does add some negative sentiment to all the markets. But at the same time, the IMF is not exactly the most accurate predictor of future events in the currency market or anywhere else. So on the one hand, it adds to the negativity, but I don't think anybody's jumping out of windows just yet, because we all know that the IMF tend to figure, they're not the first ones to figure it out. Let me just I'll put it nicely. Whenever they're not the first ones to figure stuff out, they're usually among the last to figure it out. Okay, so maybe it wasn't that nicely, but that's the scoop with the IMF. Okay. Question on New Zealand yen, near and dear to my heart because I'm short. New Zealand yen, and there you see. It's been going sideways for a while, yeah? The entry and the stop, okay, I'm sorry. The entry is actually down here, and the stop should be the original stop, 87.10. The current stop is at the entry point. The current stop is approximately a little bit above 86. The entry point was 86. I am not going to put the stop directly at 86. All right, so the stop's a little bit above 86. We hit the first target rather easily, and since then we've come close to the second target, but we haven't quite made it. And it sure looks like this area back here of former support could be messing with our trade just a little bit down here. The question really is, Ed, in a case like this, do you adapt or do you stick to the original plan? Now, most of you probably already know the answer, but think back to when we traded the euro. We did our nice short position on the euro when it broke. Remember, it broke this 135 and we got short right there, that big red candle. I remember it like it was yesterday. Right there, it broke. And it took forever. It took a long time. And you know what we did? We changed nothing. We just sat there with it, and eventually it went our way. We got out of the whole thing here, and then it really got wrecked. But we made our 350 pips So I'm not complaining. And remember, that was back when everybody was complaining that there was no volatility. Boy, those days are long forgotten, right? Now it's all volatility all the time, right? So the question is, well, Ed, this New Zealand yen, it's moving sideways. Are you going to change the plan? No, I'm sticking with it. Just like we stuck with the plan on euro, I'm going to stick with the plan now. And let me tell you something. This is important. This is a great question, and it really brings up really more of a psychological issue than anything else. Because it's easy to get impatient with this trade. I know I was getting impatient with the euro that it wouldn't hit my second target. And now it's easy to get impatient with New Zealand yen and say, well, it's not hitting the second target. I am not changing anything. Just like I didn't change anything on the euro. You know why? There's a habit, and I think it's a very good habit for traders to develop, is that you do all your planning before you enter the trade. And once you enter the trade, you are now a passenger. I don't worry about this from day to day. I'll be happy if it hits the target. I'll be a little bit unhappy if it hits the stop, but I've already made a little bit of money on it, right? I've already made 90 pips on 1/3 of the trade. So I know I have a small winner, so what am I worried about? I can't worry about the things that I can't control. So I worried a lot about where to put the entry, the stop, and the 3 targets because I can control that. I cannot control what this currency pair does next. It's going to go up or down, and there's nothing I can do about it, so I don't worry about that aspect of it. I really don't worry about what's going to happen next to the trade because guess what? Worrying about it will not make the trade work. And if I adjust the plan, right, let's just say I adjust the plan, I can tell you that I went through a long phase of doing that where I was constantly adjusting my plans. First of all, if you're constantly adjusting your plans, you don't really know if your plans work. You have no way of gauging whether or not they're good plans or not because you're not really following the plans. And second of all, if you're constantly second-guessing your plans, that's a lot of work. If I'm sitting here sweating over this thinking, should I take the second profit now? Should I move the stop down? What should I do? If I'm torturing myself like that, right, I'll tell you what, that's not good for you. The reason why I've been able to do this for so long is because I'm able to put the trade in motion and just turn my back on it and walk away and not worry about it. That comes with time. All right, I realize, I know what it's like for the first, especially for the first couple years, it's very hard to turn your back on the trade. It's very, very hard because the natural tendency is to focus on it and obsess over it, and that's what most of us do. But I've found that changing the plan in midstream, you know what? About half the time that's going to work in your favor, and about half the time it's going to work against you. So if I took the second target now, right, if I moved the second target up and took profit now, and then it dropped down and hit my actual second target after that, then I'd say it worked against me, right? And so sometimes it's going to work in your favor, sometimes it's going to work against you, and in the end it's all going to even out. But the only difference is that you're putting a lot more work in it, you're putting a lot more time and effort and a lot more, pain really, of torturing yourself over, what should I do now? What should I do? And you find yourself staring at the chart looking for clues. Gang, once I'm in, I'm a passenger. I'm not worried about that. I'm not focused on that at all. So, that's how I approach that aspect of it. Okay. Once I'm in, I'm in. I mean, look, if someone dropped a nuclear bomb, I might say, okay, I'm going flat, but generally speaking, I'm just going to stay where I am. Another question, Ed, I was not so fortunate right away. I shorted the euro on the 10. Yeah, I know. I feel bad about this. Forever I was saying, if this euro would just come up to the 10-day moving average, if it would just come up to the 10, we could get short. You know what? It came up to the 10. I missed it. I didn't get in the trade. I've been spending a lot of time on planes lately. And it shot right through the 10, so sorry. It went up to the 20, And I found a lot of times when the 10 breaks, it'll stop on the 20, and it looks like that happened today. So it says, okay, I did short the pair on the 20, and I'm in the money so far, but I expect anything can happen. Yes, yes, anything can happen. You're getting it. And by the way, if you shorted on the 20, you probably shorted around 127.56. That's where it is now. Maybe you shorted it higher because a new candle has opened since then. So maybe you shorted it around 127.60 or so. Right now it's around 126.80. My guess is you were probably up 80 pips on the trade, and that's going to make up for the loss that you got by shorting it on the 10. Now I don't feel so bad. Good job. Good job. I cannot tell you how that simple concept you teach me changed my trading. Thank you, Ed. Thank you very much, sir. Great stuff. All right, we got to talk about stocks. Okay. For a long time, and this all plays into especially the yen, for a long time, the U.S. stock market, represented here by the S&P 500, has found its support where? 100-day moving average, that green line. Look, let's go back. Let's go back. Comes down, boom. Comes down, boom. Comes down, oh, goes a little bit under, boom. Comes down, boom. Comes down, just kisses it, boom. What's different about this time? Do you think this market has any respect left for the 100-day moving average? It's walking all over it. We have spent 1, 2, 3, 4, 5, 6 of the last 7 trading sessions, at least part of every session, including this little one here, maybe just barely, but at least part of each of the last 7 trading sessions has been spent under the 100-day moving average. Now, if this line gets violated once in a while, I don't get excited. But if you can violate this line 7 times out of 7, now I have to say it's probably broken. And the thing is, the nasty nature of the way things are behaving, okay, you push it down and the buyers come in, but the buyers cannot keep it up. They push it down, the bears push it again. The buyers try to push it above the moving average again, and they just cannot do it. Now, this is the broader market. This is the S&P 500. But you know what? The small cap support is breaking at the same time. Look at this key support level. Bounce, bounce, tiny bounce. I'm breaking, I'm bouncing, I'm breaking again. This looks bad, my friends. So what have we just established? Large cap and small cap stocks are breaking major support levels at the same time, simultaneously. And every time the bulls fight back, the bears fight back harder. I think the bears are going to win. Take a look at some of the major stocks out there, right? Amazon. We've been talking about this one forever. I'm still not short. I'm just waiting for it to break that line. It's just so close. Very, very good chance I'll be short Amazon tomorrow. But that's so tech in general, right? Take a look at the NASDAQ. Tech in, this doesn't look as bad as the other markets. That's because Apple is such a key part of these markets. And we are still long Apple. It's the last stock that we're long. So we said a big tech stock was breaking down. How about a big banking stock? What do you think that looks like? I say it's a triple top, ladies and gents, and it's getting really close to breaking. Really close to breaking. That is U.S. Bancorp, which doesn't get a lot of headlines, but it's one of the biggest banks in the U.S. So USB, U.S. Bancorp. And now let's get a third one. Let's talk about another sector. How about agriculture? How about Monsanto? Huge head and shoulders breakdown and just massive ugliness here. So we just looked at 5 charts. What do we know? The large cap index and the small cap index are breaking down at the same time. We also know we also know that leaders in various sectors are also breaking down at the same time. You have to excuse me, my little girl's excited about something a few rooms down, and so it's a little bit distracting. Anyway, major sectors are all breaking. Large caps and small caps are all breaking. So what to do? Everything's breaking. Hold on. Okay, so if large caps and small caps and all these different sectors are all breaking down at the same time, well, remember our last segment, was it the last one or the one before? We got rid of JCPenney. Thank God. JCPenney collapsed. We bought this at 80.60. We ended up selling only for a 10% gain around 90.40. We should have had we could have had a 30% gain up here, but I thought it was going higher. But man, things went the other way. Glad we're out of that one. We also closed out some of our shorts because they weren't doing anything, and we closed out this one. This one also would have gone against us. This short position would have gone against us had we held it. That's Kimberly-Clark, but we got out of that one too. We really have very few positions left at this point, but we're only thinking of taking shorts. Our last long position is Apple, which was performed fine today in an ugly, ugly market. And our shorts, we have Lulu, which just looks awful. It just keeps trending lower. And we have one more short position, and that is LVS, Las Vegas Sands. That had a rough day today, but still hasn't broken the major support level. We did cover Wynn because Wynn was acting stronger, but Wynn is also breaking down the same way as LVS, but they just haven't broken yet, but they're getting close. Amazon's the next position we're taking, probably tomorrow. If tomorrow's an ugly day, we're going to get short some Amazon. Even if it's not an ugly day, we might get short some Amazon. Right now we have one long and two shorts, and we are going to go to one long and three shorts. Part of the reasoning for that is this. Even though we only have one long and two shorts, the two shorts are a lot less volatile than our one long position. So to me, I don't really feel like I'm fully hedged because I'm long this super volatile stock, Apple, and I'm short these stocks like, Las Vegas Sands and Lululemon that really don't have the same degree of volatility. So if everything starts dumping, my long position might fall more than my short positions. So I'm going to fix that by shorting Amazon, which is pretty much as volatile as Apple. How can you tell, by the way? Well, ATR is a good way to tell. If I pull up ATR, Amazon moves $7 a day. Apple moves, well, because of the split, it only moves $2 a day. Okay, so this will juice up my short portfolio. Lulu only moves $1.22 a day on average, and LVS, Las Vegas Sands, moves $2 a day. So interesting. So maybe my portfolio isn't as out of balance as I thought, but that's okay because I want to juice up to the short side a little bit. I do. Huge rally yesterday based on the Fed. That doesn't hold any water with me. And it didn't hold any water with the market. The market got excited for exactly one day. Yellen hinted that rates are going to stay low. Let me tell you something. Rates have been low for 5 years. What exactly are low rates going to do for us now? See, that's a good question to ask. So the market got excited about it really for 2 hours. All right, all this gain was for 2 hours yesterday after the Fed minutes came out, and then gave it all back. And if you're a bull, you've probably noticed every time you buy, you're giving it all back, and it's been swift and brutal, and that in itself is trying to tell you something. Okay, gang, so we are bearish. It's official. We are short more than we're long. We're probably going to get shorter, and we are long the Japanese yen against New Zealand. The Japanese yen, as you know, is a currency that tends to do well when the stock market falls. So you could say we are now very well positioned for this. We're still long Euro Swiss. That popped up close to 121.40 and pulled back. We let some more go. I wish I could tell you I let it go at the top here, but I let some go around 121.20. And I've set up to buy it back at 120.55. Okay, ladies and gentlemen, that is it. So everyone have a wonderful day, and I will speak to you again in just a few days. Take care, everybody.